Okay. Looks like we're good to go. It's 5:30 on Sunday, June 7th. Hope everyone had a great weekend. Pretty nice weather here where I am outside of Philly. We've got some great series going on between the NHL and the NBA, and I thought I had to rush through because I thought the NBA game was tonight, but I just looked at it wrong. It's tomorrow. But everything in New York looks to be a little nuts with the Knicks getting ready to win this. So a little surprising. Lot to talk about tonight in the charts, and I'm going to start off someplace I don't usually and talk about Bitcoin, something that I highlighted a week ago. And oops, wrong chart. So I'm going to go a little bit out of order just because I want to highlight that, and then I'll come back to the start and get going again. I'm really not patting myself on the back here. There's a very specific reason I'm bringing this up. But what I said last week is this rollover right from the bottom of the previous range is not what bulls want to see. And what I was looking at is this bolus of volume and this kind of low meandering push up into it. And I was like, look, we need to be able to crack this level and get accepted back into this volume range, or that'll be a problem. And you can see this happened before last week. It looked like this somewhere in last week. I'm like, this rollover not there could be a problem. You know, this is this thing. And we really followed through lower, and this led equities. We started this sell-off before equities. So let's just, with that in mind, let's get back and talk about a couple of things here. The longer term chart, and what I want to emphasize is, you know, this was a hell of a rip, and we really did not have any support to speak of before this 73.50, 55, 60 level. I'm calling it 73.50, which I think is good. Excuse me, still have the hangover from that cold. So it was a hell of a sell-off, 200 points on Friday, and we all felt it, I'm sure. But it really was just a function of how extended and how much green we had here. And we came down and we stopped at first support. So something I put on the first page is, you know, this does have my attention. This has our attention. I talked about the move a couple weeks ago. This sell-off on Friday, May 15th didn't feel so good, but I was pretty sanguine. I said, I was like, hey, you know, nothing's breaking. This is holding. Everything I could look at is holding. It's just, you know, we needed some profit taking. This is not the same thing. This is a larger sell-off. Yes, I'm very happy it held first support. It went to first support, and we even got a little bid late in the day. Little bit of a bounce, not much. And, you know, but the first support we could find did stop the selling, held the selling, just was 200 points down. Let's look at this. You can see we pushed up through here. May 15th comes into play right here. We went down, and then it took a couple of days and sort of drifted down. I believe this was like a Tuesday, and it held this very small level. That's when I said this really firmed up and confirmed these levels. And what I was and am really focused on is this absolute dearth, lack of volume right below where we've been trading for essentially a month. And that is what I'm looking at. If we accept below this, we get down and we spend time and people are willing to trade below this level, I'm going to change my opinion. I haven't changed it yet, but this definitely has my attention. So we're going to talk a fair amount about that today. And we're going to show the detail. NQ, not nearly as clean. It doesn't have the disappearing volume the way that ES does, but it does have this identifiable volume that you can point to, particularly on the short-term charts. And lo and behold, it came right here. As you can see, there's a little more volume in there. It doesn't have the clean drop off. And NASDAQ is particularly extended. But we have this clean stop. So I use the term line in the sand. That for me is like a great big technical level. This is just too small to be a line in the sand, but it can still be a pretty damn important level. And that's where we are right now. If I had to guess how we open in 30 minutes, 25 minutes at this point, we're going to get a nice little bounce. I didn't see enough bad news, and we got pretty extended by the end of the day. So I think we're going to get a little bounce. And what I'm watching early this week, tonight, tomorrow, Tuesday, can we get follow through? Can we get acceptance up above and really challenge this kind of this first small resistance level? Or can we just get some lame, weak bounce of just sort of works off the oversold and is starting to set up for another move lower. That's exactly what I'm looking for. If I had to guess, and I'm not bull biased, I'm just, based following recent history, I would think we'd get a bounce. But I am watching and I'm very open-minded. I've been saying for a couple of weeks, don't fight in that position to hey, be ready. I still not, pulling the trigger. I have not put any shorts on yet. What I need to see is acceptance below here, and I'll be shorting as much as anyone out there. So I'm just trying to follow the charts and what they tell me. Switching to RTY, this is a much smaller level, a much smaller sell-off. We didn't get nearly the participation on the way up, and we're not getting nearly participation on the way down. I don't think too many people here are trading the small caps, so I'm not going to spend a ton of time there. But as I'm happy to take questions, please just throw them in. Sorry, I just gave myself some feedback by checking questions, Q&A. Sorry about that. Dollar index, always important. A little less time this week. We did get a little bit of a bid on the strong jobs report on Friday that kicked the crap out of gold. We'll talk about that in a minute. But until we break this wedge, I'm not going to make too much of it. We could push up here and roll back over. My bias is still lower. The real takeaway is this isn't a huge move. It's a decent move in a on a short-term basis, but on a long-term basis, it doesn't really even show up. But gold was down, I think, $160 on Friday, and it broke to new lows and is now technically broken. So you got to stop. I stopped out of gold. I don't recommend being long gold right now. And again, I'll elaborate on that in just a minute. Okay, here's why I led to the Bitcoin. This is why we start off with Bitcoin and its bonds, which I think are very important. I've talked a couple of times about how I think Fed, Treasury, et cetera, are in there managing this. I won't say yield curve control, but just how much the volatility has diminished since the Trump administration took office right around in here. A little bit of a move and then just really restrained compared to history. And now we sold off down here. This hit the markets just a tiniest bit and we immediately got a relief rally. We came right up to the supply, exactly like Bitcoin. I want to see it accept into this high volume node and it's turning around and rolling over. This is the same chart, 30 minutes, that's all. We came up, want to see it get above this level, and it tried, and it couldn't. And then finally Friday, we get a little follow through lower. So again, this is not broken, but this looks a lot like Bitcoin a week ago. And we saw how that followed through dramatically lower. If we think Bitcoin hit the market, wait do you see what happens if 10 years sells off? If. But I'm absolutely paying attention to, and we'll have stuff in the chat and probably be tweeting about this week. Same thing. This is the yields. It says the thing, okay, we haven't pushed up as much, but it's looking perky. It's not coming down. Imagine what you'd think if this was a semiconductor stock. What would you be thinking? Like, I'm looking to get long this thing. So that has implications. Step back, this is my quote unquote overall view where I sum up what we're doing here. I use the SPY because it looks just a little bit different. You can see on this chart, we might have a little bit more room for downside. We've got moving average, everything you want to look at, but we didn't come down quite to this support level. So I suppose it's possible we could push down and test that a little bit before we rally. But let me walk through the text right here. I said, like, for most of the rally, when this started back here, it didn't take long at all for me to just say, hey, exactly for the same reason I'm looking at now. We broke through this, we got here and hung out, and I said, okay, I'm looking at the quality of the rally, and then we just took off. And it didn't take long at all for me to say, hey, don't fight. Don't fight. You can always take care of your long trades. I talk to too many people who decide, like, hey, I want to short this, I want to fight it. So the feedback I always give in that kind of a run is just don't fight. And a couple of weeks ago, and this is all in print, it's raise stops and protect profits. I'm like, we're extended as hell. Let's just not go for this ride down. Okay. And I said, we're still not at put shorts on, but we are at pay close attention. This is the last line right here. And it's right here. Here's the line. We're paying close attention. If we break it, then it's going to be put shorts on. Be looking around, spend your time, find the weak charts. I'm not going to be shorting the most extended ones though, but knock yourself out. That certainly is a viable strategy. Same thing here. Last week I said consolidation at the highs would be healthy. If you come down and you touch the first possible support and rally, that's actually healthy. So I'm just trying to give a measure of context after I don't even know how much this was. I think it was how much, 1,000 points on the NQ. Yeah, wow, 1,400 points. That was a doozy on Friday. So, but I'm also trying to, like, hey, look, we know where the line is. We know what to do if this line gets broken. Right now, we're not going to push shorts after that kind of a move. Okay, I threw a couple of slides in here for context. This is a 1-month move, and all right, I'm sorry, 2-month move. Semiconductors where we bottomed and then just absolutely ripped. Of course, we're going to push back. We went through the first moving average, the second moving average right there. But like, this is where I guess I would say first support. So we push through first support. Let's see how we react. But this is a function of being really, really extended. I just looked at Marvel because Jensen Huang came out and said this is going to be $1 trillion company. And it absolutely, this in early April, it's $80. And last week it's $320. Yeah, we're going to pull back. But there's this huge gap that maybe we need to fill. Are we going to have a breakaway gap of a $250 billion company? Sure, possible. But this is all to just provide a little context. This looks to me like profit taking. Have this huge move and you get this down. Yeah, I'm going to take some profits. Yeah, I'm going to take some profits. Yeah, I'm going to take some profits. SanDisk. Where are we? Let's go back. Beginning of the year, 200 to 1,800. Are you kidding? Yes, I'm going to take some profits. So that's going to be the message that I'm telling you, is this really looks primarily like profit taking. This is the Russell 1000 value. I've talked about it a couple of times because it has very little AI contribution. It has very little of these tech darlings. And this looks really healthy. This does not tell me like, hey, look out, the market's crashing, get ready. Yeah, it got hit. Okay. Yes, it did. Still, a very nice move and vulnerable to some profit taking. This is the Russell 1000 growth. You can see hit much harder. And I put it right here in the text. The contrast suggests that the names have done the best were hit the hardest on Friday. This absolutely ripped and then it got hit. But still, we're at this nice little level. I think we could easily come down a little bit more. And as long as we stay above this breakout, we're very intact. Okay, we're rotating lower. So I really want to emphasize that context. China has my attention. I didn't know what else to say on this as we're pushing. This is from last week. If you see me put again in, it's basically just I didn't change this text. Again or still. You can see, when the entire U.S. market was ripping, we really lagged, and then it just started rolling over 2 weeks ago. Got a little push, and then right back down. We're right at the lows. So if troubles come from anywhere, my eye is on China. Let's see what we can have there. EEM, as I've said a bunch of times, this is very influenced by both Korea and Taiwan and heavily weighted in semiconductors. So it doesn't have the picture of emerging markets the way that I'd like. But I've also always shown it on the way up saying, hey, we look strong. Well, we got tattooed on Friday. Again, we came right down to first support. If we just do something like this, very possible. It looks healthy. You could also make the case it's a head and shoulders top. I know people love to look at that. All of this is possible, and all of this is why I'm watching the quality of the rally. Let's see what happens from here. Breadth was not hit hard. Okay, the next couple of charts are, we got killed on Friday, and the number of stocks below the 200-day barely moved. So that's a good thing. And then this really tells the story. So this is the entire week, and here's the stocks that are available for profit taking, right? And they got just cracked. And then everything else all week looks okay to me. This isn't a week where everyone's coming out of Friday like, ouch. Financials look okay. Industrials look okay. Energy had a pretty good week. Healthcare is shaping up. This looks like profit taking and rotation. So we still got to wait and see, but this is what it really looks like to me. Let's talk oil. I've been steadfastly, I'm not going to say bullish, but for all the news we've got come out, for the number of times we've won this war, for the number of times we've had a peace agreement, for the number of times that this should break, and hey, we've got all the problems in the Middle East solved, this is not pulling back. And this is a higher low, a higher low, and a higher low. And this is exactly what you want. Again, ask yourself if this is a semiconductor stock, if you buy it. I am long oil. I bought a little bit last week. I added in as we pulled back a little bit, and I wouldn't even describe what I've taken from here to here as a paper cut. It's just a rounding error, and we'll see if there's a lot of supply chain questions, a lot of issues, and just to take it one step further, this is what I'm trading. I'm trading Brent. You can buy futures and you can buy calls on the BNO, and I'm doing it in both, but very small position so far. Again, higher low, yes, okay, not a higher high. This is a lower high. Just a lot of noise and a huge range, and you have to trade very small because this is like amazingly volatile. But I also think if this breaks, there's no price that this won't go to. I think Trump himself said he thought we might have $200 or $300 WTI, and he was like ready for it. I don't know what happens to Brent if something like that happens, but hopefully we won't see. No one wants that. Natural gas, again, I talked about this, change in character. This is not selling off the way it used to. It looks very intact, and now we're starting to resolve higher. I like this more through energy stocks and playing it. You certainly can play the futures. I just have too many war wounds to do it myself. But good luck to you if you try it. This looks very intact. That's my takeaway. No, not afraid of that on the long side. Here's gold. Big down day. I think it was 150, 160 bucks. Broke this low, which I thought was oversold. We're below. We have a declining 50-day. We were below the 150. Everything's out. This is a downtrend. You don't want to be long this. So I tried it. I was long. I stopped out. I think I stopped out Friday. So I don't know exactly when, but I know about. And I'm watching. I've seen some people say that this can go back to the October levels. I don't know why they're picking at the October levels. I would think if it's coming in, it's coming into this. But I don't know what they're thinking. And someone's also talking about valuation. I'm very curious how you value gold. Here's what we talked about again in the beginning, the push up to this supply and the rollover. Support and demand is holding as well, but this is a violent sell-off that led, I think on Wednesday night. I'd have to look. Actually, let's do it. But because I have my new toy, sorry. Pull this in and it can tell us. So this started the real sell-off. So this is Bitcoin, and when it really started to sell off. And this is Monday. I know I saw it earlier in the week, consolidated a little bit, and then it was Wednesday. I'm not willing to go so far as to call this a leading indicator right now, but for a long time, I have viewed it as a measure of risk appetite. If it gets, really starts going up, people are really willing to go risk on. And when you see this, it correlates pretty well that the market is getting risk off. So this was a little bit of a tell, and I should have shorted stuff, but I didn't. Hey, we're getting a little risk off tape here. Energy, as I want to talk about. So this is 30-minute charts. I've changed that. This is Friday right here. Not bad at all. Not bad at all. Hanging in, and if you're bullish oil and natural gas, it makes sense to be bullish energy stocks. Compare this to technology, and this is what happened on Friday. This is just a beatdown. You can see it started earlier in the week and then just absolutely cracked on Friday. It's okay. These were looking great, and this is profit taking. They're not technically broken, but damage was done. This changed things right here. We're below anything you could call support, and I want to watch and see, so this is semiconductors. I'd look at about 585. Let's see if we can bounce back above 585. Ideally get up to around 600 where we get this high volume area. And then this is XLK. Likewise, I would want it up around 185. That's a pretty decent bounce. But let's contrast that with, here's healthcare, no problem. Financials, no problem. Industrials, I'm not gonna say no problem, but not much of a problem. And yeah, okay, consumer got hurt. Not terribly, right around this level, but yes, it absolutely got impacted. So gonna start to wrap it up there. I have a couple more comments just as people are focused on Anthropic and the need for all the capital that goes with having an IPO. I don't know how much they're raising. I think it's a couple $100 billion. I don't know off the top of my head. It's not Anthropic. I'm sorry, SpaceX. something like a $1.75 trillion valuation. I believe is it Thursday, if anyone knows. It's coming. Yeah, you got to free up capital for that. So that's certainly the case. Happy to take any questions. Would love to have some Q&A, a little more interaction, especially when we have a week like this and some of the things we're looking at. I'd love to hear some feedback and people's thoughts. Let me jump over and see if there's any questions here. It doesn't look like it. If anyone wants to drop a question in the chat, please feel free to do so. Otherwise, we can call it. All right. As always, thanks very much for joining us. I know a lot of people seem to watch this on the replay, but feel free in the future to show up and ask me questions live. Looking for a bounce. I hope everyone's in position for it and had a good week last week. Good luck this week. It's getting a little bit more exciting. Feel free to drop in and have a chat. That's it for me. Have a great week.